Vishal Manchanda, Senior VP Institutional Research, Systematic Shares and Stocks. Vishal, good having you. Thank you so much for taking the time out and speaking with us this morning. I want to start off with the big picture, Vishal, because that is what is catching everybody's eye right now. What happens in the case of large tariffs if they come in? What could it mean for some of the US export-oriented, dominated Indian pharmaceutical companies? What are your thoughts?
Good morning. So my view is tariffs are highly unlikely on pharma. One, because if you look at the US, they don't have an ecosystem to manufacture pharmaceutical drugs, at least the generic pharmaceutical drugs. They might be manufacturing the high value innovator drugs, but they don't have an infrastructure to do the volumes that is required in generic drugs. So if they impose tariffs, it's going to be inflationary for themselves. So it will do more harm to the US than good. And again, if I look at the cost of manufacturing in the US versus in India, the US would be at least 1.5x more expensive than what it takes to manufacture in India. So if you want to kind of ensure there is a price parity, you either have to put a 50% tariff so that Indian generics are at par with what it takes to manufacture in the US. So I think that's very unlikely. And again, they don't have a manufacturing infrastructure to support the demand that might come in-house for them.
Okay. So you believe that's unlikely. So there is a bit of pullback that we're seeing in pharma stocks. You think it's not out of the fear of this, or is it a misplaced fear because of which the stocks are correcting?
Probably there could be some. I think if at all there a pocket of stocks that can get impacted are the ones probably in the CDMO space, because generally what CDMOs get is business from the innovators. So innovators probably can prefer to outsource more to the US based companies. And in case if these are select tariffs, so they're not imposed across the board. So even if they're imposed across the board, generic companies will continue to export, but they'll export at a higher price. But what can happen to the CDMO companies? Innovators have a choice to shift business from India to probably the US. So there could be some impact in that pocket of the sector.
Got it. Vishal, the other question is specifically, I don't know how many of these stocks come within your coverage, but CDMO. I thought both the performance and the commentary around CDMO from most companies, I mean, even a chemical company like Ami Organics, speaking very highly of the CDMO revenues and the opportunity ahead. Now, please tell us what you think of it, because for the longest time, companies have promised here, some have delivered, some have failed to deliver, and now it seems that capacities have gotten created and the future might be bright. Do you think about it in the same fashion? Are you enthused with the performance in the quarter, and are you constructive on the immediate next 4 quarters for the CDMO businesses as well?
Right. So I think if I look at the Indian CDMO space, Indian companies are generally preferred for the high volume work that gets generated in the innovator market. So if I look at companies like Divi's, they have been kind of they're speculating on the GLP-1 demand, and they are actually getting relationship with innovators on the same front. So structurally, if you look at India, it's the right place for companies to manufacture high volume drugs. And if they choose to kind of manufacture these drugs in Europe, probably it would make them very expensive. So India as a destination is very much required. And lately what we are also seeing is we are witnessing an increased demand of high volume drugs because of various new introductions that have come in the market. So I think as far as high volume drugs are concerned, India will remain a preferred destination. What remains to be seen is whether we can also get as a country, we can also get opportunities on the high value drugs. So basically the oncology drugs, maybe the formulation manufacturing, sterile formulation manufacturing, and other parts of the value chain in the CDMO space.
Okay. So Vishal, in light of that, but valuations are a bit stiff for a lot of these companies. Where within the CDMO space are you finding favor? What would be the pecking order just within CDMO? I'm not asking you to really broadly talk about the whole healthcare pocket.
So I don't have coverage on the
Okay.
CDMO space
Okay.
as such, but one name that I cover is Jubilant Pharma. They are a US based CMO, contract manufacturing company. They also have an India presence and they also have a US presence. They are into sterile formulation manufacturing for innovators and generics. And being in the US, they might be better poised than others.
Got it. And in which case, my final question to you, Vishal, if I take the whole healthcare space, I know I've spoken to you only about pharma and CDMO, not about healthcare, which may include diagnostics, hospitals, etc. But if I were to include the whole healthcare space, what would be the pecking order? What would be, let's say, 1, 2, 3, based on the current valuations and your expectations of earnings growth over the next 12 to 24 months?
Yeah. So I think I'll write. So I don't cover diagnostics and hospitals. I just have one diagnostics name under my coverage, Krishna Diagnostics. So that's I think 20-25% compounder on top line. That's going to be the best top line growth story. While the ROEs are yet to kind of come to levels where we would want them to be. They are currently around 8 to 10%. And while we would expect them to improve from here, 8 to 10%, maybe 15% over the next 3 to 4 years. On the pharma side, I think I'll focus more on the India focused stories where there is a valuation where valuations are favorable. But what I can see right now is most of the India focused names are quite rich in valuations. The US is something we need to be cautious about because we might see some pressure on earnings coming from the US from FY27 because of changes in product mix that are anticipated. So I think I'll more focus on India-driven opportunities.
Okay. Thank you so much, Vishal, for joining in right now. And CDMO also in focus. It's definitely in tough markets, it becomes the kind of defensive play.